LinkedIn, LinkedIn being LinkedIn today. So, all right, welcome everybody. It is Thursday, July 17th. I'm joined here with Morgan Holmes, the CPA of Stride, and we are talking the one big beautiful bill, the business breakdown. We will have a session for individuals next week. Today we're talking the business impacts. Morgan, how you doing today?
I'm doing great. Thanks, Casey.
Glad to have you here. I know you've been chomping at the bit to talk about this. You've said, hey, we got to talk, got to talk. So here's the chance. I'm excited. I know we've talked individually quite a bit about changes to the bill. What are the things for business owners? We'll just start right out. What's one thing that comes to mind off the top of your hand for, let's say, an MSP or an agency or some sort of service business? What should they be doing?
Yeah, so I think the most important thing in my mind for small to mid-sized businesses is the extension of the qualified business income deduction, the 20% deduction for business income.
Mhm.
That was set to expire with the Tax Cut and Jobs Act sunsetting at December 31st with the one big beautiful bill that now is extended out. So that's great news. Um, Bonus depreciation is another one, right? The huge benefit there. So if you're out buying fixed assets or other equipment, bonus depreciation is now 100% for assets purchased after January 19th, 2025. So just a little refresher on bonus depreciation. Pre-Tax Cut and Jobs Act, we had 100% bonus depreciation. With the Tax Cut and Jobs Act, we had 100% bonus depreciation initially, and then every year it dropped by 20%. So pre One Big Beautiful Bill, 2025 bonus depreciation was 40%. So if you bought
Got it.
a truck or something like that, you could take 40% bonus depreciation on it, and then just regular maker's depreciation after that.
Mhm.
Um, if you bought that truck in 2025 after January 19th, now you can take 100% bonus depreciation on it, or other equipment you're purchasing. So that's going to be a big benefit to small to mid-sized businesses.
Yeah, and that doesn't mean small businesses go out and buy a truck just for the sake of buying a truck or go buy a piece of equipment. But as Morgan would say, if you have the need and you're going to purchase, now you have that opportunity to take 100% bonus depreciation, which is great. What else, Morgan? What else within the business side should we be aware of that? I know there's a lot of misconception around, hey, what was expiring from the Trump Jobs and Cuts Act, and what else is kind of that next stage of like, okay, this is made permanent, this has been extended, and this is what should really matter to the average business owner
Yeah, or expanded. So for
or expanded.
example, Section 179, which is similar to bonus
Yep.
depreciation, it's the expensing of equipment. It's been expanded, so it's almost doubled in as a result of the One Big Beautiful Bill. So, in a previous Stride Live that we did, we talked about bonus depreciation versus Section 179 and when to use 179 instead of bonus, et cetera. So, bonus or Section 179 depreciation has now been increased. So another benefit to small business.
Absolutely. Absolutely. What situations would somebody use 179 or be in a situation? I mean, what are some of the just common things that you see on a day-to-day basis?
Yeah. So the biggest difference between like bonus and Section 179 or bonus depreciation 179 is bonus depreciation is mandatory. You have to take it, and it's all or nothing, right? You can elect out of bonus, but if you don't elect out of it, you have to take it. So if you acquire $1 million of fixed assets and you don't elect out of Section 179, or if you don't elect out of bonus depreciation, then if those assets are bonus eligible, you're going to have $1 million deduction, right? That may
Got it.
put you in a loss, and maybe you don't necessarily want to be in a loss. Where with Section 179, you can actually elect the amount of depreciation you want to take on a specific asset. So
Got it.
oftentimes what we'll do is we'll elect out of bonus and then take a specific amount of Section 179 if you're trying to drive to a very specific amount of taxable income.
Got it. I know we have some software companies and some MSPs that are doing the cloud computing and involved in some sort of R&D. I know Section 174 has been impacted. That's the right one on R&D, right?
That is, and
Okay.
that is probably my favorite change in in the one big beautiful bill.
Mhm.
We have clients that do research and experimentation. So, pre one big beautiful bill, all R&E had to be capitalized and amortized over 5 or 15 years, depending upon whether it was domestic or foreign. And that was applicable from 2022 forward. The one big beautiful bill actually changed that to where now domestic R&E expenses can be expensed. There was no change to the foreign R&E. So you still have to continue to capitalize and amortize your foreign R&E expenses. And in addition to now deducting R&E,
Mhm.
the benefit for small business, if you have under $31 million of average gross receipts, which most small businesses
Most,
do,
yeah.
then you potentially could go back and amend your prior year's tax returns and remove the capitalization of the R&E expense. So potentially resulting in refund claims.
Got it. Yeah,
If
I
it,
remember that you had mentioned that they should be reviewing past filings because aren't they allowed to go back a few years if they had, let's say, amortized, be able to fully expense that?
yep, yep. So you could go back to 22. So that was the first year that you were required to
Got it.
capitalize and amortize R&E. So if your capitalization of R&E caused you to be in a taxable income position, you would want to go back and amend those 22, 23 tax returns, remove the unamortized research and experimental
Mhm.
costs, and get refund claims. So
Got it.
if it didn't cause you to be in a taxable income position, or if you're beyond that $31 million small business exception, then your options are to unwind your unamortized R&E expenses over 1 or 2 years. So we're still waiting for guidance from the IRS on exactly how all of that's going to work. But yeah, this was an exciting change for me. I have a lot of clients that have been
Yeah.
capitalizing already, and this was definitely taxpayer favorable.
That's just for R&E based in the United States, right?
That's right. So they refer to it as boots on the ground. It has to be in the US.
Got it. So any foreign R&E still amortized over a 15-year period. Another one that I know we talk about, it's not as common, but some do face it, the business interest deduction changes to business interest deductions.
Yeah. So pre OBBBA or the one big beautiful bill, um, there were limitations on the ability to take interest deductions, and now they've added back in depreciation and amortization, which should allow you to take more interest deductions. I don't really see very many clients though where this is an issue, but bigger taxpayers definitely might run into interest limitations.
Yeah, I think that's just, it's one of those things you don't think about as common. What are some of the things, well, now that we're talking uncommon, that people may not have been aware of that had changed other than TJCA? We just use these acronyms because these are so
TCJA.
TCJ Tax Cost Jumps Jobs Act. Got it.
Yeah.
What are some of the things that maybe had been extended that you weren't aware of, or things that have changed that were just kind of the uncommon situations? I know you talked about, for instance, office snacks were
Yep.
subject to 50%. Now it's
That's
100%
right.
deductible. Like, what are some of the
That
things like that?
Yeah, so pre Tax Cut and Jobs Act, office snacks and coffee and water and all that stuff where the employer purchased that for the benefit of for the employees, but really it's for the
Mhm.
benefit of the employer so that the employees aren't going to Starbucks all day long.
Yeah.
So pre-TCJA, that stuff was 100% deductible. And with the Tax Cut and Jobs Act, those types of things, office coffee, office snacks,
Mhm.
water, etc., was subject to the same 50% limitation that meals was. And so most people don't know that. Most people probably just kept deducting it because it's
Yeah.
in office supplies or something like
Yeah.
that. But the Tax Cut and Jobs Act has now reverted back to the 100% deduction for office snacks and stuff like that post 2025. So starting in 2026. One of the other big benefits in the One Big Beautiful Bill is that, as we all know, every year we have to issue those 1099s to
Yes.
contractors, and the limit for years has been $600. That limit has now been increased to
Thank
$2,000,
God.
and it'll be adjusted for inflation as well for payments made after 2025. So that will be a compliance benefit, right? You don't have to go file all those 1099s.
I did see something around the excess business loss rule made permanent, something around there. I don't know if that would really apply. It's just something that's been out there that I've seen.
Yeah, I don't see much of this either. So,
Yeah.
yeah, but I don't have many clients. None of our clients have losses, Casey.
Yeah. Well, sometimes you have the startups, sometimes you have the clients that, they use it as an advantage. So,
Yeah,
but I know it's not as common for us. We're usually more long-standing, either quick startups or
yeah.
established businesses. What
One,
else? What else
one,
is something that a
yeah. One
business
of
owner
the
should
other
be aware of?
big benefits is, you typically aren't going to see this in like the small business world, but I have a couple clients that benefited from this last year, which is the qualified small business stock. So
Yes.
historically, that has you're required to have C Corp stock. The business, when you acquired that stock, had to be worth less than $50 million, and you had to hold that stock for 5 years or more to get the 100% exclusion. And they made changes to the qualified small business stock rules, where now if you hold it for 3 years or 4 years, you potentially could get 50% or 75% exclusion. So that'll be beneficial to holders of C Corp stock.
Didn't they also change the corporate charitable deduction or contribution deduction? That change, I know it changed on the individual side, but didn't it change on the business side too? They made a floor and certain level of
I,
limitation.
I don't know, because I haven't looked into that. I've been focused on like the big things.
Yeah. I know that's kind of one of those, hey, if you're in a tax situation or plan where you're doing charitable contributions through your business, you're in a great spot because it means cash flow is great, profitability is great, bills are paid. You probably have a long-term plan in place for retirement and such, but it's just something that you kind of see. So if you're an MSP and you're sponsoring the fun runs or the local chamber of commerce events or any of that, you might want to look into that and see what limitations. Because I know there's a floor that's established for what you'd have to minimum spend on contributions to be able to start taking them as a deduction. I know
Yeah,
that
but
was changed.
most MSPs are going to be S corporations, right? So when
Yeah,
you make that charitable contribution, it's not really a business deduction
yeah,
anyway. It's a separately stated item that will flow out to the individual. So it's
yeah.
that's more of an individual benefit.
Which I think is a misconception many have too, because I know many MSPs are doing it. They're thinking, "Oh, it's a business deduction." Well, no, it's still going to flow to your own personal tax return when you
That's
pay
right.
that.
That's
Which
right.
we'll talk about how that changed for the better next week, or same time next week on Stride Live. We're going to talk about how the One Big Beautiful Bill hits business owners specifically on their individual tax returns and what they can do. Morgan, for the businesses specifically, what are some of the other considerations they should be thinking? It's 2025. We're midway through the year. Some of these things start on January 1st. Some of these things are taking place retroactively. What should the business owner be doing here a little bit past the mid-year point?
I would say talk to your advisor about which ones of these changes as a result of the One Big Beautiful Act impact 2025. So, for example, bonus depreciation, right?
Yeah.
That goes all the way back to January 20th. And if you purchased a lot of fixed assets in, let's say, first or second quarter, and you made a big second quarter estimated tax payment,
Mm-hmm.
now with the One Big Beautiful Bill, you probably don't need to make a third quarter estimate, or you may
Yeah.
need to make a smaller estimate because you've paid estimates based on not having 100% bonus, right?
Yeah.
If you have a lot of fixed asset additions and you before were over the Section 179 limit, you probably aren't over the 179 limit now. So I would say
Absolutely.
start looking at it now ahead of that Q3 estimated tax payment. Obviously, if you don't have to make estimated tax payment, or you have to make a much smaller tax payment, that just increases cash flow for your business. So
Yeah, and I think with that message is never going to change, folks. The preaching of tax planning and strategy is really about making sure cash flow is managed correctly and you're maximizing cash flow through that tax lens through your business on the financial side.
yeah. Yeah, like you've heard me say, Casey, if you spend a lot of time trying to increase cash flow, what you're really also doing is increasing your tax liability, probably, right? So,
Yep.
you know, with the benefit of excess cash and cash flow comes the detriment of unfortunately having to pay tax. So,
Yes.
if you can get in front of that and try and reduce your tax bill, it helps your cash flow even more.
Absolutely. And I think for those, it's really simple. Cash flow goes up, the amount of taxes go up that typically that you owe, which means the need for you to have a good tax strategist and an actual plan and strategy, not just preparation of filing your return and talking to your CPA once or twice, that goes up too. So the more you make, the more profitable, the more free cash flow. You should be looking at those options. So you could, for instance, I know the biggest one that you're huge on is the 401k. How many business owners don't have that? And it's such an easy vehicle. And the fact that they can contribute another 69,000, if I remember correctly, through the business on their behalf. And that is all tax deductible for their
The
business.
total is around 70 grand. Yeah.
Yeah.
But I mean, further to your point, right? If you don't start doing tax planning this year, by the time you hit January of 2026, there isn't a whole lot you can do once you turn the corner into the next year. So get in front of your CPA or whoever is doing your taxes and try and knock those tax bills down.
And I know, Morgan, you have a lot of clients, but you're still accepting more. So if you need a new CPA and you're saying, why isn't my CPA asking these questions and doing this for me? Well, we'd be happy to chat and talk to you about it. Morgan, one last piece of advice, too long, didn't watch. What's one piece that a business owner should take away from the One Big Beautiful Bill to help their business?
Yep. It's not just from the One Big Beautiful Bill, but if you don't need an asset, don't go out and buy it just to get the tax deduction. It is bad cash flow and bad tax planning.
Yes. I think
So,
that's a great piece of advice.
Yeah, but
Morgan,
we have a lot of clients that do that. Hey, I need to go buy a vehicle at the end of the year. If you don't need it, why bother?
Yeah. If you need it, go buy it. But that goes for the MSPs out there with the cloud computing and all the fun tools that you like to buy. If you don't actually need it and can't use it for your business to drive revenue or make your employees more efficient, reduce your costs, probably not worth the investment to go do unless you really are sitting on a nice mountain of cash. Sometimes the Dave Ramsey rules of logic apply. Don't spend money you don't have. Sometimes it's that simple, especially for a tax deduction. We were throwing a bone here. We got this bill, and the bill came through before the end of the year, so there's still time. Morgan, thank you for taking your time today. We will be back next week talking about the individual impacts of the bill and what you should be doing as an individual tax situation for the rest of the year. Morgan, any other parting thoughts before we depart here?
No, see y'all next week with the second part of this. So thank you, Casey.
Thank you, Morgan.
Have a great weekend.
That's good.